All right, we're tracking what goes on with China Vanke here this morning. According to our reporting, said to be in talks with banks on a debt swap that could help the developer avoid its first ever bond default. Let's bring in our Bloomberg Intelligence, Daniel Fan. He is with us here right now. Can you tell us a bit more about this, and how important is it for policymakers to really avoid this default with China Vanke?
I think for Vanke is slightly different. So first of all, it's partially owned by the Shenzhen government and Shenzhen Metro indirectly. So I think the key is they made a distinction, kind of make it different from other developers. First of all, Vanke is conservatively managed. If you look at their ratios, it's a couple of key ratios. Cash coverage 2 times, although we don't know how much cash is usable. And also the fact that the leverage is also on the low side. After the downgrade by Moody's to junk, still S&P and Fitch are still keeping their investment grade ratings without comments yet. So I think from that perspective, then they are first of all a well-managed company, and then more importantly is Shenzhen government and Shenzhen Metro last year came out to make some supportive comments. Although there's lack of follow-up action, that is one of the reasons why causing concerns recently about the company.
There's also been talks about some of these provinces expanding options when it comes to fixing the debt strains in LGFVs, for example. This is a part of the market where we've seen investors actually quite interested when it comes to LGFVs, despite the fundamentals not really changing that much. Why do you think that is?
I think for LGFV is actually covered by my colleague, Andrew Chan.
Okay.
So I think his view is LGFV is part of the part of the SOE system. It's very important, although it's very difficult to analyze based on the numbers.
Okay. What else are we watching out for Vanke then? I mean, you mentioned there's that fallen angel risk, but what part, does it continue to roil, some of the challenges, of course, of the credit space, especially when it comes to high yield?
I think the key is, first of all, whether the government really come out to do something like for real instead of talks this time. So that swap could be the first step. If that's successful, I think the key is, again, to whether it's able to get back investors' confidence. And then I think the second one is more on the macro side, whether sales are able to recover, given what's happening in China and its relationship with the West.
Okay. Daniel Fan, thank you so much for joining us on Bloomberg Intelligence on Vanke.